I think the PBOC and Chinese officials have a difficult balancing act that they're trying to manage. On the one side, the economy has been, other than this one particular quarter, somewhat soft, and so there's been a tendency to think that policy easing has been needed. But at the same token, they don't want a particularly weak currency because that generates a number of different issues. And so what you've been seeing in the last few months is that they've been trying to hold the line, so try to keep dollar China or dollar renminbi steady. That's had the side effect that the trade-weighted yuan has actually been appreciating, and so it's quite it's an uneasy situation where you have a lot of different forces moving in opposite directions. We continue to foresee this continuing for a little while longer.
Francesca, I did have a question listening closely to your views on renminbi. It's actually about the competitive levels of export performance, for example, between Japan and China. We've seen this quite extraordinary weakness in the yen over the last year or so. Surely this starts to threaten China's relative export competitiveness. Is there some sort of motivation or desire, do you think, in China to equalize or somehow rebalance these relative levels of competitiveness? What's your take on likely currency policy?
I suspect that the Chinese currency policy is a result of what the officials are trying to, what the government is trying to achieve in terms of growth. So I would view growth and the rebalance of the economy to a more sustainable sort of sources of growth as being the key driver. Within that, the challenge that the officials have is that if you loosen monetary policy, which is what you probably should do if your economy is weak, the exchange rate would weaken. But in the case of China, when the exchange rate weakens, it generates more capital outflows and it actually tightens conditions domestically. And so what I think the officials are focusing in China is very much on trying to keep dollar renminbi relatively steady. As you very rightly pointed out, this degree of steadiness in dollar China is generating issues against the broader region where the dollar has been appreciated, particularly with a Fed that has been more hawkish, and now we expect less cuts to come. And so a lot of the Asian currencies rather are stuck in a bit of a tug of war in which some currency weakness is good because it improves their competitiveness, but by that same token it generates domestic inflation. And I thought it was particularly interesting in the last couple of days, you've had more officials complaining about currency weakness. And so the Korean officials were on the tape yesterday talking about how they're monitoring the level of dollar Korea. And so dollar China, I suspect, will remain relatively steady. There's been a couple of instances in the last few weeks in which the market has tried to have a go at moving dollar China higher, but hasn't really worked. But that's having a knock-on effect in other countries, whereby their currencies are effectively gaining competitiveness relative to the renminbi, but it's also generating domestic inflationary pressures, which, as the Ministry of Finance in Korea has highlighted, is something that they're monitoring quite closely.